Okay, so welcome to your weekly Forex forecast on Sunday, the 16th of July. I hope you're all doing well and you've all had a good week in the markets. What we're going to do in today's show, as we always do, is we're going to take a look at the major currency pairs and we're going to try to get a bit of an understanding as to what the sort of like the immediate direction is going to be for the next week in those currency pairs. And to do that, we'll talk a little bit about some of the economic indicators for next week and last week, and also obviously we'll look at the technicals. Now, last week was an interesting one. So the inflation numbers came out of the US. They came in softer than expected on Wednesday. That essentially caused the US dollar to get sold across the board. So if you look at all of the majors there, you'll see that the US dollar did get weaker. However, going into this week, and let's just jump across to the economic calendar here. So if you take a look, this is on daily FX. You can use any one you want. It really doesn't matter. I just like daily FX. I think it gives more information, and it's just one that I've used for nearly 20 years. So there you go. But what we can see here is that we've got a lot of inflation data coming out of other regions of the world. So we've got Canada, we've got New Zealand, you've got the UK, and you've got the Eurozone. So I think that we'll probably get the biggest moves out of the UK and the Eurozone. Obviously, we had the Bank of Canada last week come out with their rate announcement. So from that perspective, this will probably not have as much of an impact as some of this other data over here. So I think that the markets are really going to be focused on these numbers going into to Wednesday of next week. So where we see inflation out of the UK and then inflation later out of the Eurozone. But remember, when we're trading these things, what we try to do is you build up a directional view based on the fundamentals and based on the sentiment, and that gives you an idea as to what direction the market is generally going to trade. But then you're only going to execute according to your technicals. And the way that you use your directional view is that if you get a technical trade line up with your directional view, then what you can do is you can either look to increase your position size, or you can go for bigger profit targets or things like that, because the odds are stacked in your favor. Whereas if you get a technical setup that goes against your directional view, it doesn't mean that you don't take the trade. It just means that you're a little bit more cautious. So maybe you halve your position size, or maybe you just go for, a tactical shorter term trade rather than looking for one of those, longer term trades where you're going to get a 2 or a 3 to 1 reward to risk ratio. But with that being said, let's jump across to the technical charts and see what they're telling us for the week ahead. So we'll start off looking at the Aussie dollar here. And as you can see, the Aussie dollar, so last week's price action from Wednesday, when those inflation numbers came out, we can see that the US dollar did get sold. So the Australian dollar appreciated a lot. However, it stopped at this resistance area over here, which isn't really too much of a surprise when you see how it was, how the market reacted to this particular price level last time around. It literally came up to it. It didn't spend a lot of time there, and it completely got sold. Okay, so going into this week, how's that going to play out? Well, there were a lot of buyers in the market. Okay, last week we see that the market reacted to this level. So what I'm going to say is that if the market, excuse me, if the market were to break below the low here at 0.6829, and indeed if it holds below this, the big resistance level over here is 0.6899, then obviously we need to be looking for selling opportunities. So whether you do that on the daily chart, like I teach my clients to do based on momentum candles and things like that, or whether you decide to jump down to a shorter term time frame in day trade based on this, it doesn't really matter. But essentially we want to be short below the level at the 0.6899, or call it 6900. And then if the market manages to get above this level, then we want to be buying above there. Then we're bullish, because this is a major level. The market's got above that level. You'd imagine that there are some orders above there, whether they be stop orders or their entry orders. Essentially, you'd be expecting there to be some volume above this level. So if we do get above there, then we can expect some momentum. And then once we're into that trade, you'd imagine that the next stopping point is probably this previous level of support over here on the, on the 7th of December 21. So that could then act as resistance. So you're probably looking for the market to get out of, let's get back in there a second. So we would be looking to get out of the market when it gets up to that level in and around there, the 0.6994. So you've got about 100 pips between those two levels. Of course, if you're still in the position and you don't have the reward to risk ratio that you're looking for, or your target hasn't quite been hit, then the way that you would play that is perhaps you move your stop into break even as you approach that level. The next one that we're looking at is the euro dollar. So the euro dollar, we had this triangle in place over here. We were looking for a buy once we got the breakout of that triangle, which, obviously came to fruition, which was very, very nice. Now the market is interacting with a previous level of support back here on the 24th of November 2021, and then again it was back here again on the 22nd of June 2020. So it's quite a big level. And the way that I'm playing, or the way that I play all of these levels, is essentially if the market can hold this level, so we get 1 or 2 days of consolidation above here maybe, and then we get let's say we get some inflationary numbers that come in as expected, but certainly not softer, then you'd expect this to continue to appreciate. And in that case, we would then look for a breakout above. So I think essentially if we could get 1 or 2 days, so Monday or Tuesday, the market consolidates here, and then we get that fundamental catalyst on Wednesday, that would make for a really, really good opportunity to buy this. Obviously, if the numbers come in a lot softer than expected, then you could look to sell a break back down from below this level here. Okay, remember that's how these levels work. You essentially use them as to give you sort of like a buying bias or a selling bias. It's not to say that that's your long-term view, but certainly if we're just looking at next week's trades, as opposed to saying we want to position ourselves for the next 3 weeks or the next 3 months, this is really the best way to do it. This is the most effective way, and the way that I've done it for the, for the past 20 years. So it's something that served me well, and I'm sure it will serve you well as well. Looking at the pound dollar, we've got a similar sort of thing as we had in the euro dollar here. The difference with the pound dollar, first of all, I'm kind of the economy in the UK here, isn't looking particularly great by any stretch of the imagination. But also, if you look at the inflation numbers coming out of the UK, they're also probably the highest across the globe. Well, not across the globe, but in some of the developed world. So from that perspective, I'm expecting a lot of upside from the pound. However, we are coming up to a previous level of support over here on the 14th of December, 2021. So essentially, I'm not going to become a buyer of this until we get above that level, unless we get a pullback here. So it might be that I could do something like jump down to a shorter term time frame. Maybe if we were to go down to the 4-hour time frame, for example, and we see a bit of a sell-off down towards the 1.2858, that might be an area to pick up some sterling at that sort of level there. If the market were to sell off there, that would then give us a room to get out of the trade before we have to break out to a new level. Or the other option, obviously, is that that's not the chart I want. Let's change the time frame. The other option is that we get some consolidation around this level, and then we get a breakout above there. And again, similar to the euro, we then wait for the market, we wait for the numbers come out on Wednesday, then we get that fundamental catalyst to push us out and above that level there. So there are a few options here in the pound dollar, but I think that no matter what happens, I'm either going to be looking to excuse me, I'm either going to be looking to pick up some pound dollar at a discount if it drops down to 1.2843, or I'll look to buy the breakout. So buy high and sell higher if we get the breakout of this level here. I don't think really there's a lot that can happen next week that's going to cause me to have a bearish bias in the pound dollar. Moving across to the New Zealand dollar. So this one's a little bit more range bound. We still got the rally last week. So like all of the other pairs, we saw this appreciate a lot, but it is at a very, very strong level of resistance. So the way that we play this, again, I'm sort of erring on the side that we might get a sell-off here. Okay, so we had a big up move there. I think there are a lot of people that sold the dollar last week, and a bunch of them will probably want to take profits on their position. So not to say we're going to get a sort of like a complete change in the direction of the market, but we might get a bit of a sell-off simply for the fact that there are so many people that have already got into this position. So they'll need to unwind their positions in order to be able to take a little bit of profit. So from that perspective, there might be some short-term opportunities if you're to jump down to something like, the 60-minute chart here. So let's put that in there. So we might get the 60-minute chart start to trend to the downside. You would find a lot of opportunities there, maybe even not the 4-hour chart. Take us down towards this level at around the 0.6246. But then once we get to those levels, assuming everything remains the same fundamentally and from a sentiment perspective, they're just levels that you want to jump back into the market on the long side. The dollar CAD here is, we can see this one. So this is a little bit mixed. You didn't have as much, and that's the 4-hour chart. So let's jump across to the daily again. So here you didn't get as much of a reaction to those inflation numbers in the dollar CAD last week. And indeed, on Friday, we pretty much got all of the move from Wednesday completely retraced in one daily candle. Now, I am bearish while we hold below this level. So I think, and this could be a stronger trade in the sense that we've got more of a level to play with here, and we've got more price action, more interaction around this level. So I'm thinking that if we can hold below here, if we can hold below 1.3219, and then the market goes shorter, I think that that's a really good opportunity to get in there on the short side, and it will probably be one of the ones that goes further for longer. So it'd be a position that you could hold for like a 2-to-1 or a 3-to-1, for example, or just trail your stop behind. But if it does break back into this range, and I've seen it time and time again, you saw it over here when the market broke out of the range. Eventually, when it broke back in, it's going to trade to the other side of the range. It comes back to the top, it fails to break through, it trades back down. And this is a similar sort of thing here. If the market starts to break back into this range, then I'm going to expect a bit of a continuation of this sideways price action. And then I would anticipate the price coming back up towards the top of the range. The dollar franc. So this one here is very, very bearish. We can see that the dollar really got sold here. Remember that this is the opposite direction because the dollar is the base currency in this particular pair, whereas when you're looking at the euro dollar or the pound dollar, the dollar is actually the quote currency. So they're both telling you similar things, just in a different way in case some of you are confused there. But essentially the dollar still got sold here against the dollar franc. And, this is a trade that we've been short for a very long time. So every time the market pops up, we're looking for an opportunity to short it. And I think that this one here is one of the stronger looking ones. The only thing that this doesn't have that some of the others do is that we aren't trading with an immediate level here. If we have to go all the way back towards 2014, that was the last level that we're trading at, but we broke below that level. So what I would like to do, rather than sort of chase this to the downside, is I'd like to wait for the market to pull back a little bit, either to the 0.8702 or a little bit higher at the 0.8756. But essentially, I'm waiting for a pullback in this pair. And once I get that pullback, then I'm going to be looking for an opportunity to sell there. The final one is the dollar yen. So the dollar yen, we have been bullish for a very long time. And then obviously the market turned a couple of weeks ago and completely sold off, which was fine because we said that it was very toppy at that particular time. We were looking for a breakout of the 145 level, which we didn't ever get that. So we weren't entered into that trade. The market then completely reversed, which is understandable. And I've spoken about this in some of my briefings previously, where I think that with the Bank of Japan and their yield curve control policies, I think that potentially the market might be looking at the fact that they might alter that in some way in the upcoming meeting. Not a great deal, but they might start to talk about adjusting it a little bit. And in that case, and that's the reason that we've seen some of the yen strength here. So as this market sells off, the yen is the quote currency. So that is telling you that the yen is strengthening. And I think that's what's really behind that. The market has pulled back to a previous level of resistance, which is now acting as support. So from a technical perspective, you could look for a bit of a buy to the upside. However, I think that if you are a buyer from here, I wouldn't necessarily anticipate just yet that the market is going to return to 145, which is the previous high over here. But potentially, you could get a bounce up towards half of that move. So up towards 141 or something like that, where depending on what's going on fundamentally, we might see that we get a turnaround at that point, and then we get a breakdown of this support level over here, and then we're in a technical downtrend. So I think we're at a strong level of previous resistance, which could become support. If you were to pull in a fib level, for example, swing low up to swing high, you would see that that coincides as well with the 50% level. So it's a 50% retracement of that move. So we've got a confluence of levels there. So from that perspective, I wouldn't be surprised if we get a pop up. I just don't necessarily think it's going to be an extended one. I might be wrong. And we might be talking about it next week when the market is sort of up and around this level and saying we're looking for continuation. But at the moment, that's the way that I would look to play this pair. Okay. So I hope you enjoyed this. I hope you got a lot of value out of it. It's given you some ideas and things. Remember, I'm not telling you to go and take these trades. It's just my analysis of what I think is going to happen in the markets. You then need to marry that up with what you see within your own portfolios, within your own entry strategies and things. And if it works, then fantastic. And if it doesn't line up, then just kind of ignore it, you know? So yeah, if you did find this useful, please, excuse me, I've got a bit of a sore throat this week. But anyway, if you did like it, please make sure you like the video, you subscribe to the channel, you hit the bell so that you get a notification as and when I release more of these videos. I'm going to try to aim, to not just do these weekly videos over here, but do some during the week as well. So as we get, talk about where the markets are on Wednesday, for example, before the inflationary numbers come out and how you can play those markets. So some intraday type stuff, as well as some other content. So make sure you hit that bell so that you get a notification. If you haven't already, joined my mailing list, and I encourage you to do that. So jump across to the website. I'll post a link beneath the video here. What you'll be able to do first and foremost is you'll be able to learn a strategy that I use and has served me very, very well over the years, and a lot of my clients use as well. So that's the first thing you'll be able to do. You'll be able to understand and learn about the framework that I use that you can then immediately implement into your own training, and then after that, if you want to look at how you can learn other strategies, and you'll have all of my contact details from there as well. Okay. So thank you so much for watching this. I hope you have a really good week in the markets. If you've got any questions, please post it in the comments beneath this video here. Otherwise, I'll look forward to speaking to you very, very soon. Take care now.